Next one, I like this one. This is one of the ones one of my picks for this week. ENPH, Enphase. If you take a look over at STAX, what we see right now is quite bullish. The last few days, on the 15th, earlier this week, we saw a bunch of big money calls, all for January of 2026. The $45 strike, and we also had some that weren't big money, but still 691K and 477K. They're buying lots and lots of those contracts here. The OI is extremely high at this point, but this is very likely playing for the long run in terms of this company. Enphase is a electric company. They do semiconductors, so you can imagine in the semiconductor space, along with NVIDIA, AMD, ARM, and ASML. So understand there's definitely some bullishness when it comes down to that sector, just due to the love of AI and the necessities for all of their hardware and all of their developments. Now, the thing about it is, though, their chart has shown quite a bit of sell-off. So from their highs back at the end of 2023, or sorry, end of 2022, they've had this big sell-off, this big drawdown, down to about 33 is where I would say that lower range is. Most of their earnings have all been pretty positive up till that point. Back in 2024 is when we started to see some major misses, and we had a bit of a distribution pattern where it headed down from there. Now, the things that I want to point out here, let me make sure you guys can see that. Let me pull up the chart itself. The main thing that I want to show you guys here is the volume that started to come in near these lower ends. We see some pretty big volume spikes down below, and when you consider it compared to, beforehand, you don't see these types of volume spikes all the time, and especially when they are near the lower end, it does show that we possibly have some big money taking some positions in these stocks here. The hard part about this is we haven't seen a quick automatic reaction is what we're kind of looking for. So let me copy this in here for us.
By the way, I'm doing the breakdown for Enphase right now, so
Perfect.
Sorry if I've been silent.
No, that's fine. I got this handled for while you do that. Those of you that are familiar with my style and familiar with what I'm looking for, Wyckoff and Wyckoff accumulation, distribution, these are our patterns within our charts that we want to be, very looking out for. The idea here is that big money is going to do their thing and try to accumulate silently while news is bad and while people aren't looking at a stock. A lot of people are probably mad at the fact that overall the stock is sold off over the years and sold off after a big giant pop up higher. So another one is, you guys that are familiar with it as well, this is a very standard Wyckoff cycle, or not just Wyckoff cycle, it's called the market psychology cycle, where you see a huge run up to all-time highs and then a giant sell-off to what we consider despair and a depression side of the stock. That's actually where you want, when everybody is greedy, you got to be fearful. When everybody's fearful, that's where you want to start to be greedy. And another thing as well here is that we do see a little bit of bullish divergence when it comes down to these lower ends, and we're very likely starting to see what we consider a selling climax at the bottom of this Enphase energy. Now, we don't know just yet. That's the thing I want to make sure that we're aware of. When it comes down to these Wyckoff patterns, we are technically looking for what we consider this AR right here, an automatic reaction. I'm saying that there is a possibility we could still see further sell-off and a bigger volume spike for a more guaranteed type of selling climax. But for where it's at right now, if they do show some very positive earnings, a double beat, some forward guidance. We do have a lot of our indicators showing that it is near the oversold side of things. So we are looking for an automatic reaction. It doesn't have to necessarily pop this high. I would say toward the $60 range is probably a safer bet, or even could only go up toward 50. But I would say if we do see a good beat from Enphase, we could see a pretty solid, good-looking pop from there. Now, keep in mind though, with Wyckoff, that's just the very beginning of the phases. It would definitely take some time. I would say probably in 2027 and on, we could see this take a cup and handle look and head back up toward, toward the $80 to $90 range, if anything. But that'll take some time for it. But in terms of stocks that are beat down, that have more upside potential than downside potential, especially with this earnings this time, I would probably be saying look for the upside. Now, that also has to do with the fact if I'm just looking at this chart, I wouldn't necessarily give you that type of analysis. A lot of it has to do with the fact that when you take a look at what came in just this week with Enphase, we see a lot of buying for 2026. So they're getting ready for, I would say, probably that automatic reaction toward the upside. Okay. So that's one of my picks for this upcoming week so far. I've shared that with those in our Discord. But if you're lucky enough to have gotten through this and find this in our live stream on our YouTube channel, if you're back here after they've returned and reported earnings, I'd love to know, hey, was I correct on this call out, especially with STAX on our side. You ready for that yet, Max? You're still working on it. Oh, you're on mute.
Yeah, I just finished it. I'll post it after I kind of run through it real quick. But our snapshot here, EPS, we're expecting 62%, which is up 40% year over year. Revenue, we're expecting 356 million, 17% gain year over year. Earnings is down 4.24%. So again, not bullish. A Zacks rating gave it a number 3, which is a hold for them. We also have EPS trends revised up 7% in 30 days. So that sometime is a good case when it comes to a bounce back coming from a stock that has been, quite frankly, just losing money. The first article that came up when I looked into Enphase is, where is it? Investors' 3-year losses continue as Enphase Energy dips a further 5.4% this week. Earnings continue to decline. So probably not the greatest Yahoo Finance headline you want to see when Googling this, but hey, it is what it is. So what's driving the setup here is a couple things. So first things first, revenue is climbing, but sentiment is still cooked. ENPH has seen revenue growth year over year, but analysts are still cutting targets. JP Morgan profit take went from $64 to $37, BMO $46 to $39. Guggenheim, they gave it a sell rating and a $33 profit take. 13 sells, 13 holds, and 9 buys. That is about as split of a tape as you're going to get when it comes to sentiment from the big boys. Investors want proof of execution. I think the time for hearsay is over, and that execution from them specifically just has not happened in their eyes. Now, price carnage is another thing. It's down 25% in the last 90 days. The stock cratered from over $130 last year to, well, now $39. Even with earnings growth, expectations are absolutely shattered. Chart-wise, one more miss could break that critical support at $34 as well. For our macro and market signals we're looking at, solar margins are under pressure from oversupply and pricing competition. U.S. renewables incentives are still strong, but demand is pacing slower than expected. Europe is seeing a rebound, but ENPH's exposure is mostly in the United States. So that's really going to be the only thing they see. Analysts see 96% profit growth ahead, but this quarter specifically may not be the one to spark the turn yet. We also have some insider buying. The CEO is starting to step in. The CEO bought 4,000 shares at $46.35 a share back in April, and now he owns 1.6 million shares of the company. This could be a bullish tell or a falling knife catch as well. For our valuation check, we're looking at a PE ratio of around 36.75x. It's well below solar peers' peak valuations. Market cap's at 5.2 billion, down from the 30 billion at its peak. Our bull case, revenue growth is intact, EPS revised up, insider confidence, aka buying in April. Analyst models show 2026 inflection, and solar sector sentiment can always turn around fast, as we've seen with other FSLR, Sunrun. Think of names like that, and some of the gains that we've seen not only in Investor Central Club, but you'll just see on Twitter. Now, the bear case is it's an ugly chart. There's no real technical strength to it right now. The earnings ESP is negative. It missed 3 of its last 4 earnings as well. It has a macro risk plus oversupply pressures, and price targets are just falling. Instead of seeing increases with these, which is what we'd want to see on a bounce back, we're seeing all the big guys potentially look to cut their losses here sooner than later. Now, they have elite tech, but growth margins and investors trust all took hits. If they beat and guide stronger, we could see a vicious bounce here. But another miss, this thing could unplug completely. Eyes are going to be on post-earnings commentary, margin expansion, and install partner data as well. So, yeah, let us know what you guys think about this. Is it long and ready for liftoff? Are you a post-earnings buyer? Are we going to short the slump? Or are we avoiding solar until further notice and we get a little more clarity instead of these vicious swings in opposite directions, to just put it frankly, because there's no other way to really say what's going on with it.
Very good. I like that. That's a lot of information there, guys. 2 things that are bullish. Number 1, STAX is showing a lot of those buys for 2026. Could they be early? Very, very, very possible. Buys from the president and CEO. He got in at $46. It's already dropped back down toward 33. It could be, could he be ready and readying himself for the future? Very possible. But like Max said, if they have, poor earnings, if they don't have good guidance coming forward, could this see a further drop before it gets bought up? I agree with that. There is a possibility. There is risk to the downside still. Just because it's been, I wouldn't necessarily say a huge capitulation drop. There still might be a little bit more to come. But in terms of the earnings gamble that people love to look at, people love to play, if they are able to give that upward forward guidance and we continue to, here's another thing is, if STAX continues to print out those calls this upcoming week on Monday, and double check when they report on Tuesday, right? Yeah, they report after on Tuesday. So if Monday and Tuesday you still see additional calls coming in, that's probably your sign that this is expecting a pop back up. But again, earnings, we always tell you guys, be careful with earnings. It's always going to be somewhat of a gamble. But what we're trying to do here is we're trying to give you guys the data, the information, what STAX says, what the charts kind of show us, to get us ready for potential pops and potential profits to be taken. So keep that in mind.
I will say with solar, the one thing you will see are a lot of insider moves. So I would say even just looking at STAX right now and filtering from the 14th to the 18th last week, very small sample size, right? But when I look at this, all it's telling me, so I'll give you an example, Coinbase, right? That thing dropped. When STAX alerted me for those $400 calls on Friday, it was when coin was at 378. And I was like, okay, these are due next week. That's kind of risky. And we saw what happened with that. That it alerted it at a $3 entry, so $305 a contract. And if you would have held them a week out, those would have went. They peaked at $48.50 a contract. So you would have had a nice $4,500 gain on a 7-day swing. And if you look at that kind of like call block that came in for those $400 calls, and 380s, I think, were the other ones spread out. ENPH has a very similar pattern, except it's only for the $45 calls, which is a good sign for it. And another thing that you can do is look at the timestamps. So we can see that someone bought in a golden sweep at the 41.51 spot on the 15th. And all of these came in on the 15th, mind you. So we have 1.28 million dropped on $45 calls, 2,000 contracts at the 40.51 spot. Mind you, it's a 640 average. Then our next order we would be looking at is at 131 on another bounce. They bought in at 645 for even a higher premium. Then we see at 250 a 1.12 million at 605 because it was at $40, so it had lost 66 cents. And then we saw some more hedging because at 234 we saw 39.97, another 691K deployed, and at 301 40.24 we see another 477K deployed. Now, granted, these are all automatic executions, so the way I would read this is was probably a multi-leg order with orders that were placed at certain price targets, and those price targets executed, and that's why we're getting that automatic execution tag within it. So that's how I read these options plays, by the way. So when you guys see me post like an order block, these are the things that everything I kind of just divulged to you in 2 minutes. That is how I read order flow from market open to market close 8 hours a day. So those are kind of the things you're going to be looking for. And with ENPH, this is very similar to Sunrun and what we've seen with that as well. And the other thing is the expiration dates on these. So clearly we're expecting a long-term bounce here, but again, this has a great setup in terms of being a potential 500%, 600% type of situation, just based on the buying pattern of the last, and that's just looking at the last week, mind you.
I mean, they're aiming for 45, which just let's see in here.
And mind you, 45 by start of next year. So
yeah,
that's another thing to kind of keep in mind as well. I would also, this would be one of those ones where I would look at like, did we see any big sells for the $45 as well? Yeah. For a similar time range.
45 would be up 13% from where we're at right now. So I mean, again, gamble could go either way. You got to understand the company itself is doing its best to try to make sure that they boost their own stock price, right? And the president CEO's gotten in, and STAX shows a lot of these orders in which somebody is expecting upside and